Standard costing and manufacturing profitability are like two sides of the same coin, fundamentally intertwined in the world of business. If you're a manufacturer, understanding this relationship is crucial for your financial health. So, let's break it down in a way that's relatable and easy to grasp. Imagine you're running a manufacturing business. You have a product that you're passionate about, but the numbers? They can be a bit daunting. You want to know if you're making money or if you're just treading water. This is where standard costing comes into play. It's a systematic method that sets predetermined costs for materials, labor, and overhead. Think of it as your financial roadmap. You set these standards based on historical data, industry benchmarks, and your own operational insights. It's like having a GPS for your expenses. You know where you want to go, but you need to understand the route to get there. Now, let's talk about manufacturing profitability. This is all about how effectively your business turns production into profit. To be profitable, you need to ensure that your revenue exceeds your costs. It sounds simple, right? But in reality, it's a balancing act. This is where standard costing becomes your ally. By keeping track of your actual costs against your standard costs, you can identify where you're overspending or underspending. If your actual costs are consistently higher than your standards, it's a red flag. It means you need to dig deeper, investigate why, and make adjustments. Maybe your suppliers have increased their prices, or perhaps your production process is less efficient than it should be. So, how can standard costing actually improve your manufacturing profitability? Let's dive into 3 key ways. First, improved cost control. With standard costing, you have a clear framework for estimating and budgeting. You can anticipate expenses and strategize to minimize waste. Picture this. You're producing widgets, and you've set a standard cost of $5 for materials. If you find that you're spending $6, you know you need to take action. Maybe you negotiate better prices with suppliers or switch to more cost-effective materials. This proactive approach can save you significant amounts of money, ultimately boosting your bottom line. Second, greater visibility into product costs. Standard costing gives you a clear picture of your costs over time. You can spot trends and variations, allowing you to adjust your pricing strategies. Let's say you notice that the cost of labor is creeping up. With this insight, you can make informed decisions about whether to raise your prices or optimize your workforce. This visibility is essential for staying competitive in the market. Third, improved planning. Standard costing allows you to forecast your future needs accurately. You can identify potential issues before they become significant problems. For instance, if you know that a particular material's cost is expected to rise, you can adjust your production schedule or find alternative suppliers. This kind of foresight is invaluable in maintaining profitability. However, it's essential to recognize that standard costing isn't a magical solution. If not managed correctly, it can harm your profitability. Let's discuss 3 ways this can happen. First, unreliable costing figures. If your standard costs are set too high, you risk pricing your products out of the market. Conversely, if they are too low, you might find yourself losing money on every sale. It's a delicate balance, and getting it wrong can have serious consequences. Second, poorly implemented variances. Standard costing relies on variance analysis to identify discrepancies between actual and standard costs. If this process is mishandled, it can lead to incorrect assumptions about your production efficiency. You might think you're doing well when, in reality, you're overlooking significant cost inefficiencies. Third, unfavorable pricing. Setting standard costs too low can lead to trouble covering your overhead, forcing you to set prices that don't reflect the true value of your products. This can alienate customers and diminish demand. On the flip side, setting them too high can make you less competitive, driving customers to your rivals. So, how can manufacturers improve their use of standard costing to determine true product profitability? Here are 3 strategies to consider. First, adopt standard costs that accurately reflect actual costs. It's essential to regularly review and update your standard costs to ensure they align with current market conditions. This way, you can make informed decisions based on accurate data. Second, regularly review standard cost assumptions. It's not a one-and-done process. The business landscape changes, and so should your assumptions. Regular reviews help you stay agile and responsive to market dynamics. Third, use standard costing to identify and address cost inefficiencies. By comparing actual costs against standard costs, you can pinpoint areas that need improvement. Maybe it's a specific production line that's underperforming, or a supplier whose prices are too high. Identifying these inefficiencies allows you to take corrective action and enhance your profitability. Now, let's talk about how modern financial planning and analysis software can elevate your standard costing practices. In today's fast-paced manufacturing environment, leveraging technology is essential. Modern FP&A software can provide real-time data, enabling you to make informed decisions quickly. You can set standard prices and costs accurately, ensuring consistency across your product lines. With this software, you gain access to comprehensive analytics that help you assess production costs like never before. You can track material costs, labor expenses, and overhead in real time, allowing you to make proactive adjustments as needed. This level of insight is invaluable when it comes to optimizing your manufacturing processes and improving profitability. In conclusion, standard costing and manufacturing profitability are inextricably linked. By understanding how to effectively implement standard costing practices, you can gain control over your costs, improve visibility into your product pricing, and enhance your overall planning capabilities. However, it's essential to approach standard costing with caution, regularly reviewing your assumptions and leveraging modern technology to stay ahead of the curve. If you're feeling overwhelmed or unsure about how to navigate this landscape, don't hesitate to reach out for help. Consulting firms like CFO Consultants, LLC specialize in helping businesses like yours make sense of standard costing and improve profitability. They have the expertise and experience to guide you through the complexities of cost accounting, ensuring that you're making informed decisions that drive your business forward. So take the leap. Schedule a free consultation and discover how you can unlock the full potential of your manufacturing operations. Your profitability depends on it, and the right guidance can make all the difference.